Good morning in the United States, hello in Europe, and good evening to our viewers in Asia. Welcome to our weekly show to kick off your investment week every Monday here on Traders Yard. As always, I have my fellow friends and traders with me. So let's start with Mike Seidel, who's a great portfolio manager and a good trader living and working in Germany. We have Rudi Born, German asset manager living in Japan most of the year. And we have, of course, Gilbert Kreuzthaler, or maybe if you're English spoken, Gilbert Kreuzthaler. Well, nearly impossible to pronounce that correctly. Also a trader, of course, and founder of xTasyTraders and Traders Yard, based in Austria. And not to forget myself, Martin Gersch. Okay, so I think you see my screen already. So before we start, we have to remind you of the risks in trading in the financial markets. Futures, stocks, and options trading involves substantial risk of loss and is not suitable for every investor. What we show here today is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security mentioned. We are no financial advisors. That's important. So, but as we are all traders and not only analysts, we normally put our money where our mouth is. So we may hold positions or plan to take positions in one or more of the markets that we're analyzing today. Important for you is know your own risk tolerance and your trading time frame, and of course act accordingly. Well, so let's kick off the great show today with a quick analysis of the gold market, because gold always is a market that's interesting for many traders. So I switch off my cam so that you have a bigger screen. Okay, so let's start with a broad overview of the gold market. So we're starting here with a monthly chart of gold, and maybe a little tip from myself. If you're working with like really long-term time frames, it's a good idea to use your chart in a logarithmic scale. So not linear as we use it normally, but logarithmic. So you see the really percentage in the price change. And if we take a look at this monthly chart, we see we did make a high here in August last year, and then the price began to pull back. And what we see now in the weekly and the monthly chart here is we see something like a bull flag in the monthly. So this is really bullish if the price of gold manages to break out above. And what I'm doing, if I'm looking at longer time frames, I sometimes get rid of the smaller parts of the candles and just use the bodies for seeing like these flags a little bit better. And if we do this, we see the gold market is in the process of breaking out of this bull flag already. So in the first view, of course, this is bullish. As we can see, the long-term time frame market is in a suitable uptrend. We do have a correction here, and maybe now this correction is over if we look at the longer time frame. So let's switch to the weekly chart of gold. That's the weekly chart. And we see, of course, we see the same flag on the weekly chart. Yeah, we can use these borders around here. So on the weekly as well, we are in the breakout zone. We are above the 10-week moving average, which is bullish as well. And what we can do, like in this midterm time frame, we could take a look at the seasonality of gold. And in gold, I like to use a 16-year seasonality. So we have 15 full trading years and the running year. to project where prices could go in the near future, and we see that we do have a bullish bias here from the middle of this year. We do have a bullish bias here over the last 16 years in gold, and the bullish bias should last at least until end of August. So the seasonality also is to the upside at the moment, and we could look at other time frames as well. So this is like the 10-year seasonality here. Let's get rid of this one. This is the 10-year seasonality, and we can see in the last 10 years, starting somewhere from where we are now, we also have this bullish setup also into the end of August. So really bullish on the seasonality, quite bullish on the chart. We can see we do have this uptrend here on the weekly chart as well. And that's, of course, that's bullish. So last thing I'm always doing if I'm taking a look at commodities is I'm taking a look at the positioning of the COT data, so of the commercial traders and the large speculants, so what we typically see in the commitments of traders report. And I do have the commitments of traders report of gold down here. The red line is the commercials, the blue line is the large speculants, and the green line is the non-reportables. So I'm always focusing on the hedgers and the commercial traders. It's the red line down here. And to get a quicker view of how these traders are positioned at the moment, I'm just taking this last number here, and taking a look, if I compare it to the maximum and the minimum over the last 26 weeks, so the last half a year. And we see that we have been really bullish around here, from the side of the commercial hedgers. And if commercial hedgers are really bullish, that's what we see here. We've been above this 80 level. Bullishness of the commercial traders, if they are really bullish, we normally see rising prices in the market. We had the same situation around here, and we see prices move from $1,700 up to more than $2,000 an ounce. And we had the same situation here, and we saw prices beginning to move in the upward direction. So actually the positioning from the commercials still is on the bullish side, and this is why I like long trades in gold at the moment. So what we had here on the daily time frame is, let's get rid of this one. What we have here is, of course, also a great bull trend, an uptrend, and we had a breakout of this last bull flag here, and now we approached the 200-day moving average. So normally around this level there is some resistance in the market. See the same level here, it's the same price level around 1850, the same test of the 200-day moving average, and we just see in this moment that price is rejected at this level as well. So what I'm looking for is maybe something like a sideways consolidation, maybe a little retracement down here in this range, 1810, 1815, and then I'm looking for long entries in the gold market again. So the overall view of the gold market in my case actually is bullish. So I think this was quite interesting for all the traders who are into the gold market. And I think now I'm moving over to Mike.
Yes, sir.
Who I think is taking a look at the Nasdaq. Is this correct?
Yes, absolutely right. After the gold market, we will have a look to the Nasdaq. So this is your wake-up call for the Nasdaq trading for the short-term traders, maybe. And I have also for the show two stocks for you. Maybe not for short-term trading, but long-term trades could be interesting in Facebook. And if you have time, Airbnb. But first of all, we want to have a look to the Nasdaq. But before we do this, I will just switch over to my screen, to my monitor. Just give me a second to do this. It takes a little moment. I hope I can handle this. Otherwise, I ask Gilbert for help, but it should work. Give me just a second. Here it is. Thank you. Helping hand in the background. So this is the Nasdaq. But before we will have a look to the Nasdaq, we should have a look to what's happened in the last week because of the inflation rate in America is a bit tricky, not only for the Nasdaq, also for the economy. What is the problem when the prices increase too fast, too high? It can bring down the whole economy, and this is what the Fed will have in mind, and I think they will have a look to the rates after a few months, because when we see too much price increases, this can be pretty difficult in short term. But the markets are relatively stable. Last time, as we had a good inflation, a strong inflation, the 10-year rates went up, were increasing, but this time not. We had an inflation rate of 4.2%, but the interest rates, the 10 years, were relatively stable on a good level, so between 159 to 160, and the markets stay cool in this area. It was not the same behavior like the last time. And what we also see is coming down in the volatility of the markets. You might know the VIX, and the VIX came up in the last week for 2 days, for 2 or 3 strong days, and the indices came strong down, a sharply down move in the Dow, in the S&P, and of course in the Nasdaq. And Tuesday and Friday, we could see the volatility dropping down and the markets came up, but this is not typically a strong sell signal, not always. And this is what we will do now. We will have a look to the right. Yes, you should actually see my monitor now. So I switch off my camera, and I hope you can see it. This is the Nasdaq, the daily chart of the Nasdaq, and what you can see here is that the longer trend based here in March 21 is coming up to the upside, and when we see this chart in the weekly, we will see the same picture. We have a quite strong uptrend, but this is just the big picture. And in the big picture, you can see you have a really good price level working as a support here. I just paint this or draw this in here in this area. So this one here, this is a strong support level over here in this first area. We could see this here, resistance over here, support over here, and last week the market tested exact this level and came up with a good buying power. But the big question is this still the signal to go all in for long, or is it more or less just a regression in a downtrend? And with this in mind, we have to have a look to the reporting season. We are still in the reporting season, and what we see is around about 70% of the reporting companies beat the expectations, but especially in the Nasdaq, we see sell off this news, and this is typical behavior in a strong downtrend, and this is what we see. Here, when we have a look into the Nasdaq, you can see this is the bigger picture over here, but we have the current trend over here. This one is for sure the downtrend, and what we have is we have at the moment the correction, and you see the markets get weak here in this resistance level around about 13,400 points. You see the daily candle over here. It's more or less a sign of a weak start into the week. We do not know if the markets came up, but the downtrend is still active, and we just need to see higher prices to confirm this strong recovery from the last week. What we can expect, maybe some downside pressure and a test of this level over here, so round about 13,000, 12,900. This could be possible when we break this latest low over here and we write new lows below the 12,900 points. The next target for the index for day traders, or especially for swing traders that trade into the daily chart, 12.6 or here 12.2. These are the points that we have here in the Nasdaq, and this is the short-term range. The long-term range is a bit different because of the long term also for technology, in my opinion, is clear to see on the upside. So this what we see here is just a regression to the strong bull market in the weekly, and I'm pretty sure we will see this because the winner of the pandemic stage that we have already were technical companies like Zoom, for example, or also like Facebook or like Amazon. All these companies are pretty strong in the technology markets, and they came down. Facebook came down round about, let's see, minus 10% from the high. Let's check the Facebook stock at first before I switch over to, I think, Rudi. This is Facebook. This is the weekly chart from Facebook. And what you can see here is Facebook is also related in a strong uptrend. You see this here in the weekly and in the daily too. We will just switch over in a few seconds to the daily, but the weekly is very interesting. Why is it interesting? Interesting is the weekly because of we see here this strong support level over here. It's this range over here. This is the support level between $295 and $300, and this level is crucial for the next weeks, because when we see this level as a base for a strong rally, we can expect Facebook will attack the high over here, the 330, and then go up and up and up. The sky is the limit, but it must not be the time for now. So short-term traders should have a look what's happened during the next days. Have a look just here. This one was the test of this level, and Friday we got a strong buy day, and this, you see this here, a good volume over here and a very strong candle. But what you see here too is that we have also, like in the Nasdaq, the downtrend here. This is, oh, moment, let's have this in red, right? So this one here, see, this is the short-term trend, and the short-term trend is also a downtrend. And this is what we have to accept at the moment. The level where we are at the moment here is the strong support level, or better, a resistance level. And when we will see a strong day today too, after this, so a so-called follow-through day, then will we have the chance here to test this level here round about 320, 325, and this is a very strong, what we say here, strong behavior. This would be, but it must not be. But is for the day, for the trading day of today, is it very interesting to see what happens over here? We will see the same behavior as we see at the moment in the Nasdaq. We should accept that the market is not yet finished here in the correction mode, and we maybe get some better entries. And a good plan for an entry is, of course, this level over here, this one. Just maybe you will have an eye on the $300. Maybe we get a chance, and when we get a chance, we can maybe enter the market here in the first run. And the second one is when we just switch over to the weekly, we can see for the case, just for the case that the correction is not yet over, so that we see a wider correction also on the general markets, we should have a look here. This is the next bigger level, round about 250. So, and this set, I would say we switch over to the next one. I'm not really sure, Gilbert, Rudi, who will take over.
Gilbert, you may go ahead. I'm just waiting and watching.
Okay, good. Then I'm taking over. Just a moment. Need to make me do a moderator, make presenter, show my screen. Yes. So I guess you can already see my screen. I also will shortly switch on my webcam. I have two symbols in mind, or in the queue today. One is black, the other one is Hewlett Packard. I'm starting with black bar systems. Black bar, basically, it's, as you know, there is a saying out there, never touch a falling knife. But here with black, it's a little bit different. I will just give you a short overview also what black bar makes interesting. It's a hydrogen producer, and hydrogen is an upcoming mega trend. I mean, this is the whole electricity cars and something like this. There is always in view that this will not really last for a long time, and the technology will go over to hydrogen cars and so on. It's a very green energy, so there are many arguments why hydrogen might be really the energy provider of the future. What Plug is currently doing is they are working to open a new hydrogen plant next to Fort Worth in Texas, and there they will produce about 16 tons of hydrogen per day. There are further of them are planned in Buffalo, in New York, Lancaster, Pennsylvania, and so on. What happened to them? Shit happens. They made a very big mistakes with their accruals in the balances in the last 3 years, and this was corrected by KPMG, that they found out that the balances are looking much brighter than they were looking in the last years. So this is positive. They could correct it to the positive side, the balances. The next is that it was earnings were expected by $0.06 per share, and at the end, at the last earnings, it came out that there was actually $0.11 per share. This was a surprise of 83% to the positive. So, okay, so black. We see here in black quite a long and sharp up move in the last year. So from June to January, it was a high and really sharp up move. You also see it here on the monthly chart. So this was completely overheated here for any reason. And of course, if something gets overheated, it will go into a correction. What happens here is now that black went back, and for me, always the moving averages are very interesting, where when I see when a symbol touches a moving average in different time frames. And here we see there is a correction back to the SMA 20, which is a very important mark for me all the time to look how the symbol is reacting there. In this case, we see black went back to the SMA 20, and now we already have a reaction here at this point. I'm just opening the weekly chart here. So this is black in the weekly chart, and we see also here it's according to the location point. We always had touchdowns to the SMA 8, so it's really behaving according to the rules of location points. We had here sharp reversal bar, and now here we are at the EMA 130 approximately, not correctly, approximately. So this is also a mark I'm looking over all the time in my trading system, trading strategies. If a symbol gets close to the EMA 130 and has a reaction there, it becomes interesting for me. So let's see at the daily chart. at the daily chart, we see here a cluster of 3 different location points, location point lines, 4 even, no 3 there. This is the SMA from the monthly chart, this is the EMA 130 from the monthly chart, and this is the EMA 30 from the weekly chart. You can see them here, and you can see them also here. So this means we are in a, based on this location point system, we are in a very strong support area here. And looking at this candle here, we see already also a very strong up move with a high volume. So it comes volume into black, as it seems. So what would need to be done here? So I would say the saying, never touch a falling knife, should be respected. But what I would recommend, or I would do in this case, just waiting what then the next days are doing. If it really happens that the market goes up, comes down, and makes a reversal here around this area, then it would be a point to get into somewhere at around 24.65, something like this. Or if the SMA 20 from the daily is still a resistance, might be that and this, I rather suspect this, the market should come down here, because this would be the preferable situation. We are getting a double bottom here at this point, and then we see here some reversals at this price here at around 19.20, something like this. So if something happens, if you see reversals here, or the market goes up here and makes reversals here, then this would be for me the case to get into black. Okay, that's it from my side. Who is the next one?
I guess it's me.
Yeah, that's correct, Rudi.
And I'm taking over also with the screen. But I cannot grab it. Maybe you have to give it free for me, or maybe you can check. Ah, here we go.
I sent it over to you.
Perfect. Thanks for your help. Okay, what I'm talking about today is, yeah, a little bit something nobody knows so much, but I think it's really worth a view, because it's a really nice trading pattern, something I really appreciate. The good thing is, for all these guys with a fundamental background, we are here with the growth stock, so it's not the sorry, with the value, sorry, no, vice versa. It's not sticking with the Nasdaq. In this case, it's a little bit more the slow guys. No, but not really, because in the last few years we had a really strong growth with this market as well. But what I'm talking about, let's check the charts. That's maybe nice, way nicer, so that you can see it best. I will switch or turn off my camera, and you can see this is American Waterworks, AWK. And you can see, yes, indeed, even this, yeah, let's say boring, nobody's talking about this, but even this had a really strong move to the upside. You can see here 380 or even more %, depending on when you start this, but it was a strong market in the past. And the good thing is, the good news, I see a very good chance that we have a continuation in the bull market now. Why do I think so? It's really an easy thing. I'm not so much with the fundamental situation, to be honest. Normally, I'm just checking the chart picture and want to see whether the market participants are trying to buy this or to sell this. So I'm trying to estimate where's the power in the market. And in this chart, I think I can see this really easy. I will make this in a full screen so it's easier for you to follow that. So what we had here is in this case, a strong move to the upside. You can easily see this. We have not too many setbacks. We had one here, we had one here. The major ones a little bit something inside maybe, but you can see it was a strong move to the upside, coming down, strong to the upside, coming down, and strong to the upside. And chart technical analysts checking for the Elliott waves, for example, would say, wow, this is looking really impressive. This might be something useful, especially if something really corrective will follow, because we had something strong here to the downside. How can we understand which one is the strong and what is the weak side? Of course, we had a really strong to the downside, but we did not have any weak to the upside. So we can neglect this one. We don't need this anymore. What I think is this is over the next starting point of a strong move was this one here, and currently we are a little bit in a down move. We can also estimate this with Fibonacci, which is useful. You don't need to do that, but if you like it like I do, then I always have a look how deep is the setback. Is it far enough, for example, 38.2% level? Some people like to see the slope. Is it not too fast? I don't like it if this lowest point here is too much on the left hand side, because this indicates that the setback is even faster and stronger than the pushing market. That's something I try to avoid because I'm not sure which one is the strong side. But in this case, I feel that we were slow enough. The time until the low here is long enough to say this is a corrective pattern, and on the other side, shape wise, this also could be something. It looks a little bit like a pattern which is quite corrective. So in this case, the weak side is the downside, the strong side was the upside. So I think we have the best chance for a continuation. This is something theoretically very often, if you have a really strong move and a break, then there's a continuation to the upside. This is not really rare. You can see this several times. You can see this was a really strong move. You can see this is a really shaky move, a corrective pattern, ABC sometimes, and you have a correct continuation. The same like this, for example. And of course, the same here on a lower time frame and here on a bigger time frame again. So if you see something like this, then the chances are very good that after this corrective pattern is over, there's a continuation of the strong move, which is this one, and is guiding us to new highs in this case. So I think there's a very good chance that we will continue to the upside. So that's what I'm looking for. Normally in this case, I also check, is this a real low or is it just an intermediate one? And like we had here, we had several lows before, so it's not the first one. But in this case, the market came from this highest level here. There's an easy way to approach this. You can just check, okay, this is my strong move. You can just draw. You can, of course, you can see it by eyesight or you can see your crosshair, but to make it clear for you all, you can just measure something like this. And in this case, you can see, okay, chances are not too bad. The market came from here in an ABC pattern, by the way. So when overshooting this level, there's a chance that the market will continue. But in this case, we have an additional information because of this part of the market. This was a strong one already. This is a shaky move to the downside already. So we don't need to wait for this to enter the long side, which is maybe not the best point to enter because this is nearly the same level like that before. I don't like this so much. But in this case, we can, for example, take levels like this to think about, okay, we are just starting something. That's something simple as it is, what I'm doing. Of course, you can also use something like an indicator to find a turning point. I have here my own indicator settings, but to be honest, normally I'm not using them so much, but they are also indicating already that we are on a turning point. This is for the hardcore guys who want to try to enter the market very low. The advantage is, of course, a better risk-reward ratio, but the downside in this idea is, of course, that the probability of having a run now is not as high if you have a break of this level here, for example, which is indicating, okay, the lower lows, the lower highs here, this rule here in this case is broken, so this is giving us an extra information on that one. But whatever you prefer for your entry, you can decide which is whether you are more aggressive or more waiting for some additional information. This might work for your trading idea to give you a perfect entry here, or a reasonable entry you can use here. So what are the targets? The first targets for this one, what I'm normally saying is that what we had here needs to be continued in the same level, and this is also giving us in the continued picture of a bull market something above here, because you can think about a break here will also give you a good chance to continue above this level here. So these are, let's say, something like minimum targets. I can imagine even higher prices, but levels like this, which is roughly $180, these are typical targets, a minimum of the one-on-one projection. So you can see this part here continuing to this part here is 100% to the upside. So things like this are quite easy to see in the chart. that's the reason why I prefer this. It's really easy to apply this. Sometimes you don't see this so clear like this, like it's here. But in this case, I think there's a good chance. And when we are breaking this level, you have two ideas for setting a stop. If you need really high probabilities for not being stopped out, the logical minimum stop is here, but this is far away. I don't like it, and it's not giving you a perfect risk-reward ratio. In my case, I normally try to set my stop here below this level, because I said, this break is indicating that this down move is over. So there's no reason to stick with a position when this is proved false, because if this is over, we should not see a break through this level here. To be honest, I have some additional idea for setting a stop. Just to give you a brief idea is I'm just not setting the stop on the lowest point here, but I'm drawing Fibonacci's here from the lowest point to my entry point, and then I get rid of these old ones. Then I have some Fibonacci levels, and the 78.6 level, this is my typical stop, because of course even here we need a breather sometimes. You remember, on lower time frames you also have a breather, but it normally should not go below this point if the following market is pushing upwards. So I think it's a good idea to trail a little bit, or to start a little bit higher with initial stop. It looks a little bit ridiculous, it's only a little bit, but try it out. You will see that the risk-reward ratio by this small amount here is increasing strongly. So I recommend to think about this at least here. Maybe you can try it with some trades or paper trades to see what the reaction is if you use this one. So that's my idea here with this maybe not very famous stock, but I think the situation is here perfect. And to be honest, I'm not trading famous stock. I trade to get money, and what market it is for me most of the time I'm not interested in this. I'm quite interested in the earning date, so that I know, okay, is there a gap chance or something? It's far away, so no danger from that side. So this is what I think is a good possibility to see something. So that's from my side with American Waterworks. Who's next?
Yeah, I guess that's me again. So really great stuff until now. So let's see this one here, and that's my screen. Okay, cool. Thank you very much for all the interesting information until now. We had two tech titles like Plug in Facebook, and now American Waterworks. What Rudi thinks nobody knows. I owned it quite a long time. I got rid of it several months ago, but after the correction we saw, this could be an interesting investment again, I think. Okay, so what do I have for today? First stock I want to show you is Callaway Golf. Ticker is ELY, E-L-Y. Very interesting as far as I'm concerned. They produced a loss in the last quarter. You can see it here in the fourth quarter of 2002, and the numbers were below expectations. That's not too good most of the time, but we had a really great quarter afterwards. So it's I think it's 4 or 5 days ago where they gave out the earnings, and it was much better than expected. And we can see it here, like with the revenue. The green bar is the revenue, the blue bar is the earnings. Last quarter, small loss. This quarter, really good profit. And this is earnings per share, was around 12 cents was expected. We were above 60 cents a share. And so that's really good numbers. And the market acted accordingly. So if we take a look at the charts, first thing I want to show you is in the weekly chart, in the monthly chart down here, we see this really crashing moment here in the stock that was beginning of the corona pandemic. Stock tumbled around 80%, so that was really bad for all the investors, but it rallied up more than 600% until then. so you have to be a little bit careful because there's a lot of volatility in these names. On the weekly chart, let's take a look at the weekly chart. Oh, this is 1 minute. I don't want to see that. Weekly chart. Here we have it. Yeah, we saw like this nice ABC correction on the weekly after we started this big bull run and made the highs here around 32.50-ish somewhere. I had this ABC correction and then this nice break above the 10-week moving average. We have the RSI indicator moving up again, and now this indicator is in the power zone again above 70. I really like this setup for single stocks, strong RSI on the weekly chart. And what I like most in this stock is the reaction after the earnings. This was earnings date, I think the 10th of May after market close, or maybe 11th before market open, but it was a great reaction to the earnings. And we saw this really good breakout above the last high with a lot of volume. And then we saw this correction with really declining volume in the stock. There were not too many stocks traded compared to these last 2 days. And now we're in the range of breaking out again to the upside. So I really like the small retracement after the day after the big move, because it was stopped here around this support level from this last high. I really like this move. So good correction to a big support level, and then the buyers came in directly again. So now I think we have two possibilities how the stock price could move from here. We could see another small correction, maybe to this last all-time high here. Small correction to the downside, 32.50-ish somewhere, and then pull up again. The other possibility is that the market keeps being strong and we see like a direct breakout to the upside, and I would be willing to buy the breakout as well, but I would like more to see like a little bit of sideways move, sideways reaction, maybe for 2-3 days. See a retracement in this range, 32.50-ish, or maybe 31 somewhere down here, that we test this level again, and then we see like a sideways corrected range, and then the breakout of this range. But if the market keeps being strong, I think there's still a lot of upside for the stock. In Europe, we still have restrictions for golf players. There are still some golf courses that are closed down because of COVID. I know that in the US it wasn't this dramatic. So because it was outside, fresh air, not so dangerous to get infected with COVID-19. And so many new golfers were attracted to the courses. And what is Callaway doing? Callaway is producing golf equipment, is producing golf clothes, and is owning Topgolf as well for several months now. They bought Topgolf, that's like an indoor golf company, and I think they really have a lot of possibilities to keep on growing and keep on building up their revenue and their profit. So I really like this setup, and I'm really bullish for Callaway Golf now at the moment. Okay, that's my first stock for the day. I hand over to Mike. I can see him already.
Yes, sir.
Then now you can take the screen and show us what you got.
All right. Yeah, we will have the screen very soon. But before, some words, some introducing words. What we will talk about now is a stock named Airbnb. ABNB is the listening on the Nasdaq. It's the title on the Nasdaq, and I know I was talking a few minutes ago about the weakness in the Nasdaq, and you must not think that Mr. Seal is a bit silly in mind, but when it comes to Airbnb, also comes to the theme recovery trading. And just have a look to my preparations over here. There are some very, very interesting informations around Airbnb, because Airbnb, you might know it, it's the traveling sector, and Airbnb was extreme weak during the whole pandemic stages that we had before, of course, like the whole sector. But the last numbers were very, very interesting. We got the last numbers last Thursday after the markets, and this green candle over here, you can't see this at the moment, but the Friday was a pretty good day. We couldn't see more downside pressure. And before we have a look to the chart, we first should have a look to the numbers, and the numbers were quite solid. What we see here is that we had the situations that, let's have a look to the numbers, and the numbers that we have on the important side are the booking numbers, and the bookings were $3 billion above the expectations. They reported $10 billion in booking volume, and only 7 were expected. This is number one. And number two is the cross booking, and this is very important. The cross booking rate is, sit down, hold on tight and listen, 3% above 2019. What does it mean? This is pre-pandemic, so we can expect a very, very strong recovery when the numbers are right. And what we should also have in mind, the save the date, 24th of May. The Airbnb company has invited to an event to talk about the future, because the travel markets would have been changed during the pandemic and would, or maybe will, never be the same. And the biggest fundamental changes in travelers' behavior are a reason to change some settings in the business of Airbnb. And this is very, very interesting, and this can be the situation where we can have a very, very good and strong buy point here in the stock. And now it's time to switch over to my screen. So I will share my screen with you and switch off my camera so that you can see only the chart. And this is what's important now. What we see here is, this is the chart from Airbnb. IPO was last year in December. And having this in mind, last year in December, you might know the time is not yet that long that Airbnb is listed on the Nasdaq, and you might know there's a lock period after the IPO, and this one will end in May. So maybe we will see some more pressure, just in case that we will have some purchases. No, not purchases, some sellings from the insider. But for the whole business case that I was talking about, we are at the moment in a pretty good level, and we are also near to the lowest low that the stock had here since the listing on the listing on the Nasdaq. So we had here the first price, it was round about 146 or so, and the low here was at round about 120. This level is very, very important, because of after this low the market started up into a strong up move, and when you know that the first buyers on the IPO could buy one stock for round about $68, you know they are very, very strong in profits, and they might have the time to wait for the recovery. And this could bring this level over here as a very important level. Here you can see this is the dip, the current dip, and it depends on what the market is doing. Maybe we will see the first test of this level, bringing the buyers back at the moment, at this time, and then in short term we might have the first targets maybe over here in this selling level here, this area around about 160, 165. But in long term, and this is for the investors, we could see a good situation to start to get some stocks over here in the portfolio, and maybe when we get the chance to come in a bit cheaper here at this level, maybe over $120, you can collect a few more for the futures. And this is, in my opinion, a very, very good situation for the past pandemic version, when Airbnb will come back to old strengths, and the people all around the world will be happy to traveling around the world, and this will bring more money to Airbnb. And let's tell it once again, Airbnb is the only company in the sector that is gross booking rates over the pre-pandemic. This is very good and very nice to see, and maybe a good chance we will have an eye on it. And this situation over here, when we will see the markets go up, we will see here a strong buy signal. And when you see what we had here, the Friday candle, I mentioned it before, it was under a very strong volume, and it wouldn't be unusual when we get follow-through interest to buy, and this is what we should have in mind. That's from my side to Airbnb, and I would say I give back to Gilbert, and after them is Rudi back on track.
Very interesting, Mike. Just one thing what also comes into my mind with Airbnb is social distancing. That of course people in hotels, they're somehow still afraid to get infected maybe, and now they're looking for apartments and something like this. So this could also be a very good indication or effect why Airbnb really could be a winner out of this whole pandemic situation currently. Yeah.
Yes. So yes, I'm absolutely with you, Gilbert. Sorry for interrupt you, but this is one thing where I expect to get some news in the May event. So I think exact what you are telling is one of the changes in the travel behavior, this distancing, and this could be very, very interesting for Airbnb too. Thank you for this, Gilbert.
Yeah. Yes, I think a good stock to get in. It's also a falling knife, but I think there is a reason why it should not fall any longer anymore. Great. Yes, okay. My next symbol I'm trying to analyze is Hewlett Packard. Just to give a little information about it. Yes, Hewlett Packard, I think everybody knows it. Produces laptops, desktops, printers, toners. So basically it's a very important player. The sales were estimated with the last earnings at 6.74 billion, so it's quite a huge player. But 6.81 were reached. Actually, it was a decline in the previous year they even had, but also the earnings per shares, they got increased quite a little bit. This is also very positive, from expected 0.41 to now 0.52. So it is quite positive. It also was a surprise for about 20%, a little bit more. So yeah, I would say this is a good base to have a closer look into that, even if it gives some location point signals to me. Then I'm always looking much more closer into it. Yes, so what is the current situation? Let's have a look at the monthly chart. In the monthly chart, it looks a bit, let's say, yes, a little bit interesting, because what happens here is that in this area here, we are on previous relative highs. So this is always, of course, somehow an area where you could touch these levels, and then you get some reversals here, and the symbol could fall back. But where I'm basically looking at is, let's get this away. Good. Okay. But what I'm always doing is, I'm looking, when I'm getting location point signals, I'm looking always into different time frames. And here in this case, we are getting a location point signal on the daily chart, but also on the weekly chart. And looking at this candles here, you see here the up move, it's also working quite well. The location point areas were touch properly, and then we had reactions here on the SMA 8 on the weekly base. And here we have a so-called 8 train, which is a reversal bar into the long direction, but also the next one, because here in this week we had some troubles. Of course, the fear of inflation is now going around, and of course Israel and so on. So the market is a little bit nervous. But here we also saw that we have a reversal bar into the long direction. So that means the whole situation looks quite bullish at this moment. So what do we see in the daily chart? In the daily chart, I see here this so-called stairway pattern. I'm just opening here. I'm switching on the weekly SMA 8. So here now we see the weekly SMA 8. This is something what I also have drawn here, that we see the market was always coming back to the SMA, weekly SMA, and we returned here out of that. So now we are in a sideways phase. We had here a short stairway pattern. It ended up on the other side of the standard deviations of the Bollingers, but here we have a strong reversal into the long direction with a stairway double bar retracement. And also the last candle we broke through the SMA 20 here, and here we also have a long candle, a reversal bar into the long direction. So this is for me an indication that the market is strong. The market wants to go up, and so the scenarios would be to enter the market. I mean, here we have that this distance, this entry distance is quite far already. So the risk calculation would not really fit into that anymore properly. So from my point of view, it's again what should be done or what could be done. Either this candle here should be taken with an entry and stop, or to be sure is to get the confirmation, because location point is also calculating the risk out of the distance of the entry and the stop. And of course, the tighter the candle, the entry candle is, the higher the volume what you can trade. So here also what I would recommend is, and here what we also see maybe is this failed breakouts. These failed breakouts, what I'm always talking about, that we here have a failed breakout. Out of this, the market is coming back. We here have a failed breakout, but at a certain point, if then the market is really strong enough with some patterns here, it is an early indication that this breakout could be could work a new breakout. And here we also, just to remind, we have here in this area also the historical resistance from the monthly chart. So what I would do in this case is, again, the market should go up, should come down here, and as soon as we see in this area here a reversal, then it's time to get in. So this is, of course, such a candle like this would be the ideal situation, sometimes around here in this area. If you see this, then it would be a good indication to wait for a single bar retracement or double bar retracement here at these prices, and then go into the then just try to get into the long direction here. Yes, I think that's it.
Great, Gilbert.
Yeah.
Well, thank you very much. Let me see. Just grab the monitor, because it's time. I think we had really some nice setups today. We had something for the breakout traders, something for the trend followers, and some turnaround candidates as well.
Yeah.
But sadly, our 60-minute slot is finished. So we want to thank you for today. We wish you a good trading week, a lot of profitable trades, and it would be really great if you stick around next Monday again, because we are ready to kick off the next week as well. I think there will again be some very, very interesting setups. Yeah, mark the date in your calendar. Next Monday, same time, 60-minute, our candidates for the week. And that's it so far. Thank you very much. Have a good week. Bye-bye from my side.
See you. Bye.
Bye-bye to everyone.